Welcome to the Deep Dive. We sift through stacks of information, find the crucial insights, and basically give you a shortcut to being really well informed.
That's the goal.
And today, we're diving into Gilead Sciences, specifically their second quarter 2025 earnings and all the strategy updates that came with them.
Yep, we've gone through the earnings call transcript, the 10Q filing, the whole lot.
Our mission here is to unpack it all for you. The financials, the product news, especially HIV, oncology, cell therapy, and what it all means for their future.
And there are definitely some interesting bits in there. Get ready for a few surprises, maybe some aha moments too.
Absolutely. So you mentioned interesting bits. What stood out right away from how management talked about this quarter?
Well, they didn't hold back. They actually called it very special and one of their strongest clinical quarters.
Very special. Okay, that's strong language from leadership, not just, solid results.
Exactly. It signals something significant happened beyond just the usual numbers.
So let's look at those numbers then, the foundation. How did Q2 actually shape up financially?
Okay, so top line, total product sales were $7.1 billion. That's up 2% compared to last year. Total revenues, $7.082 billion, also up 2%. Pretty steady growth there.
Okay, 2% growth, solid, but maybe not very special on its own.
Right, but here's the kicker, the bottom line. Profitability. Net income attributable to Gilead, it soared, up 21% to $1.96 billion.
Wow, okay, 21%.
Yeah, and diluted earnings per share, same story. Up 21% to $1.56.
So modest revenue growth, but much stronger profit growth. What does that tell us? Better efficiency?
That's part of it, definitely operating more efficiently and also likely a more favorable product mix, selling more of their higher margin products.
That makes sense. And that kind of performance must give them confidence for the rest of the year, right? Did they update their guidance?
They did, and it reflects that confidence. For the full year 2025, they're now projecting product sales, excluding Veklury, their COVID drug, to be around $27.3 to $27.7 billion.
But how does that compare to before?
That's a $5 billion increase in their expectations for the base business. That's huge.
$5 billion. Okay, so they're really seeing strength in their core portfolio.
Absolutely. Including Veklury, the total product sales projection is $28.3 to $28.7 billion. And for diluted EPS, they raised the forecast too, now expecting between $7.95 and $8.25. That's up about 20 cents at the midpoint.
So the core engine is firing on all cylinders.
Yeah.
And are they sharing that success with shareholders, buybacks, dividends?
You bet. They returned $1.5 billion to shareholders just in Q2. That included $527 million in share repurchases.
Okay.
And maybe more importantly for the future signal, the board approved a new $6 billion share repurchase program.
Another $6 billion. That's a strong vote of confidence from the board in their own stock value.
Exactly. It says they think the shares are a good investment right now.
All right, clear picture on the financials. Strong quarter, raised guidance, returning cash. Let's pivot now to the science, the innovation driving those numbers. And you really have to start with HIV, right?
Yeah.
It's their legacy area, but it seems like it's still evolving rapidly.
Oh, absolutely. The HIV franchise is, well, transformative is the word they keep using, and the numbers back it up. Sales were up 7% year over year in Q2, hitting $5.1 billion.
7% growth in HIV? That's remarkable for such an established area.
It is. For the first 6 months, sales are up 6% to $9.7 billion. And they've actually increased the full-year guidance for HIV. They were expecting flat revenue. Now they're projecting about 3% growth.
So something's definitely re-energizing that market. I'm guessing the new prevention drug, Yes2Go, has something to do with that buzz. Lenacapavir.
A huge part of it. Yes2Go got FDA approval. It's a twice-yearly injectable for HIV prevention. I mean, think about that convenience. Twice a year versus a daily pill.
That's a potential game changer for adherence alone.
Totally. Gilead believes it has transformative potential to actually help end the HIV epidemic. That's the goal they're stating.
Wow, and it's not just a U.S. thing, is it? They mentioned global reach.
Right. Big partnership announced with the Global Fund. The aim is to make lenacapavir accessible to around 2 million people, mainly in low and lower middle income countries over the next 3 years.
That's significant from a public health perspective.
And it's got major endorsements. Both the WHO and the International AIDS Society just recommended lenacapavir in their updated prevention guidelines. Plus, they got a positive opinion in Europe, CHMP, so an EU decision is expected soon.
Okay, so global momentum is building. How's the actual launch going in the U.S.? It's only been, what, a few weeks?
About 6 weeks in, yeah. And they said they are super thrilled. Unaided awareness, people knowing about it without prompting, was 72% at launch. That's really high.
72% already.
Yeah. and aided awareness over 95%. They saw the first script filled within hours of approval, first injection within days.
That's incredibly fast uptake, especially for an injectable that requires a doctor's visit.
It suggests huge pent-up demand and real excitement from doctors and patients.
But injectables can be tricky with access. Reimbursement? How are they tackling that? Getting it covered by insurance?
They're moving fast on that, targeting 75% access within 6 months, 90% within 12. And crucially, the J code, that's the billing code docs need, is confirmed for October 1st. That was ahead of schedule.
Okay, J code is key. Any early wins with payers?
Yep. Already got formal coverage in California and Florida Medicaid. Those are two massive states for pre-EP HIV prevention.
And making it easy to actually get the injection.
They're offering flexibility. Doctors can buy and bill in the office, patients can go through specialty pharmacies, or even use alternate sites of care just for the injection, trying to make it fit different workflows.
Smart. What about the external tracking data, like IQVIA? Does it show the same level of excitement yet?
They said it's directionally aligned, but still early days. Some channels aren't fully captured yet, so they expect it to stabilize over the next few quarters.
So wait and see on the hard prescription numbers, but the early signs are very positive.
Exactly. The key metric they're watching now is the number of covered lives increasing over the next quarter or two. That will really signal the launch trajectory.
And I see a bigger chance for Yes to go outside the U.S. compared to their older pre-EP drugs.
Yeah, much broader opportunity internationally, especially in places with high HIV rates where they aren't meeting those 2030 prevention goals. Lenacapavir's profile is just that compelling globally.
Makes sense. Okay, before we leave HIV, what about the established players? Discovery, Biktarvy. Is Yes to go cannibalizing them yet?
Not really, or at least not yet in a major way. Discovery actually had its best quarter ever. Sales up 35% in Q2.
35%. Wow. How?
Mostly better pricing, higher average realized price, and continued demand. It still holds about a 35% share in the pre-EP market, great access, often zero copay for patients.
So Discovery is holding strong for now.
For now, they do expect a shift in the mix as Yes to go ramps up, so maybe a slight dip eventually. And Biktarvy, their main treatment pill, sales were up 9%, mostly from demand and people switching from older Gilead meds like Gemboya.
Okay, so the older drugs are declining, but Biktarvy and Discovery are still very strong pillars alongside the new launch.
Exactly. It's a portfolio approach. And the pipeline behind it is still incredibly packed.
Oh, yeah. What's coming next in HIV?
They're aiming for up to 8 more HIV product launches by 2033. 5 of those by 2030.
8 more? Good grief.
Yeah. Including a once-yearly injectable version of lenacapavir for prevention, that's in phase 3 now, could launch as early as 2028.
Once a year? Okay, that's another level of convenience.
Right. And for treatment, they've got updates coming later this year on a new daily pill combining bictegravir and lenacapavir, plus a weekly pill combo with islatravir, expecting phase 3 updates in 2026 for a potential 2027 launch.
Daily, weekly, twice yearly, covering all the bases. Any hiccups in that pipeline?
One minor one. A wholly owned weekly program called Wonders hit a clinical hold, causing maybe a 3-6 quarter delay. But they have other candidates moving forward. And longer term, they're even testing lenacapavir with broadly neutralizing antibodies, aiming for a twice-yearly treatment injection around 2030.
So still huge innovation happening in HIV. Let's switch over to oncology and cell therapy. How's Trodelvy doing?
Trodelvy's looking strong. Sales hit $364 million, up 14% year-over-year, and actually up 24% just from the previous quarter. It's still the leader for second-line metastatic triple-negative breast cancer.
Still the leader there. But the bigger news is the push into first-line treatment, isn't it?
That's the key focus. They're working on filing for first-line approval based on results from the ASCENT trials, which they called potentially practice-changing.
And first-line means?
Nearly twice as many patients, potentially staying on therapy longer. It's a much bigger opportunity and obviously a huge potential benefit for patients to get it earlier. Its strength there is easily offsetting the loss of the bladder cancer indication in the U.S.
Got it. Okay, what about Kite, their cell therapy unit? That field is getting crowded.
It is. Cell therapy sales were $485 million. That was actually down 7% year-over-year, mostly lower demand and those competitive headwinds you mentioned, but it was up 5% from Q1.
So some stabilization maybe. Any positive developments?
Yes, a potentially significant one on the access front. The FDA removed the RMS requirement for the whole CAR-RT class.
The REMS, that's the extra safety monitoring program.
Exactly. Removing it should make it less burdensome for hospitals, doctors, and patients to administer and receive CAR-T therapy. could really help adoption.
That could be a big practical difference. Any exciting clinical news from Kite?
They highlighted new 5-year survival data for Tecartus and a type of leukemia B-cell all-L. That's the longest follow-up for any CAR-RT in that disease, which is important for showing durability.
5 years is impressive in that space.
And looking ahead, there's NHL for multiple myeloma. They expect pivotal data from the Imagine-1 trial later this year. They're positioning it as potentially best in class, given the data so far in their manufacturing setup, aiming for a 2026 launch.
Best in class, bold claim. They must be confident. Are they looking beyond current CAR-RT tech?
Definitely. Seeing promising early results for what they call next-gen bicistronic CAR-RTs. One called Kite 363, targeting two markers, CD19 and CD20, looks good in B-cell cancers, and interestingly, they're now going to test it in autoimmune conditions too.
Autoimmune, using CAR-T outside of cancer.
Yeah, it's a huge potential expansion for the whole field. They also have data suggesting another bicistronic CAR-T could work against solid tumors like glioblastoma, so really pushing the boundaries there.
Fascinating stuff. Okay, quickly then. Liver disease and Veklury. How are those areas looking?
Liver disease, well, the newer drug Livdelzi nearly doubled its revenue from Q1 to Q2, hitting $78 million. That's driven by PBC market share gains, but they expect growth to moderate a bit in Q3 as the switch patient pool slows down.
And the older HCV drugs?
Those are declining, pulling overall liver disease sales down 4% in Q2. Lower prices, lower demand as the market matures and cures pile up.
Makes sense. And Veklury, the COVID drug. Let's be way down.
Oh, yeah. $121 million in sales. Still holds over 60% share of hospitalized COVID patients in the U.S., but there are just far fewer of those patients now. They cut the full-year forecast for Veklury by $400 million, down to about $1 billion total expected for 2025.
Right, back to a more normal baseline for the rest of the business. Okay, let's zoom out again. We've seen the product performance. How are they managing the business side? Costs, margins.
They're managing costs pretty tightly, it seems. Product gross margin actually improved to 87% in Q2, helped by that better product mix we talked about.
87% gross margin is very healthy.
It is. R&D spending was up 9% in the quarter, funding that big pipeline, but they expect full-year R&D to be roughly flat compared to last year. And SG&A sales general admin costs was flat in Q2, and they expect it to actually decline mid to high single digits for the full year.
So investing in the pipeline but finding efficiencies elsewhere. Sounds disciplined.
That's the picture, yeah. Disciplined spending.
But it's never totally smooth sailing in pharma, is it? There are always external pressures. Policy, competition. What are the big ones they're navigating that might matter to, our listeners?
Absolutely. Pricing pressure is constant. You've got the Medicare Part D redesign, the Inflation Reduction Act, the IRA. While Gilead wasn't picked for the first rounds of Medicare negotiation for 2026 or 27, the IRA overall is expected to, increase their payment obligations eventually and put pressure on prices industry-wide.
And the state-level stuff, too.
Yep, lots of states looking at their own drug pricing rules. It's a complex patchwork.
What about that most favored nation idea that's been floated? Basing U.S. prices on the lowest international price, particularly for Medicaid. How could that hit Gilead, especially with their big HIV presence?
That's definitely on their radar. The MFN proposal for Medicaid could significantly impact revenue, as Medicaid is, maybe mid to low 20% of their HIV business.
So a decent chunk.
Yeah. Gilead says they're talking with policymakers, trying to find ways to ensure affordability but also protect innovation. They also point out that for Medicaid patients themselves, out-of-pocket costs for HIV meds are already often zero or very low because of existing programs, so the impact might be more on company revenue than direct patient cost.
Okay, that's an important nuance. And related to access, what about the guidelines supporting zero copay for pre-BP, like Yes2Go? What if those changed?
Good question. The current USPSTF guidelines are a huge plus for access, mandating that free preventative service. Gilead obviously supports them strongly, but they also pointed out that the PB market was growing before those guidelines really took hold.
Ah, okay.
So they seem confident they could work with payers to maintain good access even if the guidelines shifted based on the drug's value proposition.
So prepared for different scenarios. Beyond policy, what other operational risks did they flag? Things that could trip them up?
The usual suspects for a big pharma company, but important nonetheless. Forecasting sales accurately is tough, especially with wholesaler inventory changes. Intense competition, obviously, from generics and other brands. Protecting their patents is a constant battle.
Manufacturing.
Supply chain.
Big ones.
Yeah.
Potential disruptions, reliance on single suppliers for some things, that's always a risk. And just complying with all the complex regulations, FDA rules, post-marketing studies, it takes huge resources.
And being global adds layers, too.
For sure, currency fluctuations, political instability in different regions, evolving climate change regulations, adding costs. Litigation is another one. They still face lawsuits related to older drugs like VRED. Cybersecurity threats are always there. And finding and keeping top talent.
Okay, so a whole range of challenges they have to manage constantly.
And one more they noted specifically this quarter risks with acquisitions. They actually took a $190 million impairment charge related to a drug called bulevirtide they acquired, which just highlights that R&D deals don't always pan out as hoped. Right. A reminder that innovation carries financial risk. Okay, so let's wrap this up. What's the big picture here for you, the listener?
Well, we've seen Gilead had a really strong quarter financially, fueled by impressive execution and innovation, particularly in HIV with Yes2Go showing massive potential. Oncology and cell therapy are pushing boundaries too.
Yeah, financially sound, exciting pipeline. But they're also operating in a really complex environment. You got policy changes looming, pricing pressures, operational hurdles.
Exactly. There's this constant tension, isn't there, between the incredible cost and effort of developing these breakthrough medicines, like a twice-yearly HIV prevention shot or CRRT for solid tumors, and the societal need to make them accessible and affordable.
It really is the core challenge. So the thought to leave you with is, how will these kinds of advancements continue to reshape medicine? And maybe, what role do we all play in navigating that complex intersection of innovation, access, and cost in healthcare's future?